It's always been the case for months now that the path to a potential soft landing was always going to be narrow, in doubt, bumpy. Seems more so, but there seems a Fed acknowledgement there that, or an assessment of what price might have to be paid for this fight against inflation. What's your reaction to how Powell presented things yesterday? And of course, we have other central banks chasing inflation the same way.
Yeah, I mean, this is the great awakening. The great awakening of central banks to the fact that they are way behind on inflation. Words are not enough. Actions are needed. And whether it's a 75 basis points yesterday or whether today the Swiss National Bank, which is more significant, I know that sounds strange, but that is more significant than what happened last night. That is an illustration of that.
Why is it more significant?
Because the Swiss National Bank always fights a strong currency. For it to get ahead of the ECB and hike not 25 but 50 shows you that we are in the midst of a secular regime change. And this is going to be fundamental to the economy and to markets.
Historically, the SNB is more aligned with what the U.S. Fed does, what the ECB does.
What the ECB does.
And so this is to align with us is different then?
Correct. Okay. And to get ahead of the ECB is significant.
Because they think the ECB is wrong, or because they're fighting inflation, they need a stronger currency to help their people along the way with this? They've got to try and shut this down.
So both, because they think the ECB is slow because of so-called fragmentation. The ECB is worried about Italian spreads. It's worried about the fact that it's making monetary policy for very diverse. That's A. And B, no one wants a weak currency. They look at Japan. They look at the United Kingdom. They don't want to be there.
Yeah, once again illustrating how difficult the whole experiment in Europe is with different economies that with the same. I mean, it's crazy. Can they ever get it right? They used to call multi-speed economies. Remember?
Multi-speed economies. That's one. But I think also, and Joe, this is one thing that you and I agree on. It's about time we exit this artificial world of predictable, massive liquidity injections, where everybody gets used to zero interest rates, where we do silly things, whether it's investing in parts of the market we shouldn't be investing, or investing in the economy in ways that don't make sense, zombie companies, et cetera. We are exiting that regime, and it's going to be bumpy.
Well, and it's going to be painful then, because we have tried to minimize the pain for, 13 years. We didn't, pain from the financial crisis, the pandemic, everything. Is there a day of reckoning? It's now?
Yes, 8.6% inflation is the day of reckoning. You cannot ignore 8.6% inflation.
Mohammed, there's a way of presenting things, and maybe Powell nodded in this direction a couple of times, which is financial conditions have tightened a lot. Yes, it hasn't just been words, but their words for the last 6 or 7 months have gotten, mortgage rates up where they are right now. We saw the effect on new home sales, credit spreads, and things like that. Equity valuations, right? I mean, the move from very easy levels of financial conditions to maybe neutral, maybe getting restrictive, has been dramatic. Does that leave us in a position at some point in the relatively near future where the Fed can say, maybe we'll just see how this plays out and see if growth can survive it?
No, because if the Fed doesn't validate the markets, then we'll get an even more disorderly outcome. Mike, there's 3 tests. One, have financial conditions tightened? Yes, they have. 2, have they tightened in an orderly fashion or somewhat of a disorderly fashion? We're more towards a somewhat of a disorderly, not completely disorderly. Mm-hmm. But 3, has the Fed been leading the process or lagging the process? And the Fed has been lagging the process. And as long as the Fed lags the process, it's going to be problematic for markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.